All right, welcome back everybody. Episode 2 of the Chermane Trades Mentorship. Okay, today's lecture we are going to go over order flow signatures and price action. Let's get straight to it. Now, what are order flow signatures? Okay, order flow signatures are very specific things that occur in price action that helps us determine which direction the market is likely to go. Okay, now how is this helpful? For one, order flow signatures can provide insight into daily bias and overall market direction. Okay, they can be used as confirmation before getting into a trade. They foreshadow when reversals are likely to occur. And if these signatures are absent, then the market condition is likely high resistance. And as we covered in the previous lecture, that is not something that we want to be trading in, okay? Types of order flow signatures. Okay, there's two main types that I like to look for in my trading. Okay, this is something when you watch my live streams or if you're a frequent viewer of my YouTube channel, these are the main things that I look for when I'm in a trade. Okay, you'll hear me say this a lot. Okay, you want to see speed above highs if you're bullish, or speed beneath lows if you're bearish. You'll also want to see speed through opposing PD arrays, and I'll show examples of that in just a little bit. Okay. Second signature type is you want to see fair value gaps completely stay open, or if you're bullish, you want to see the lower half of fair value gap stay open. If you're bearish, you want to see the upper half of fair value gap stay open. And again, we're going to see examples of all of this in the chart. Now, if we see these two signatures in price action, we can trust that the market is likely to continue in that direction. Let's look at some examples. So here in the chart, okay, this is a little snippet. See these highs up here? Assuming, and we're going to get into daily bias in lecture 7 or 8. But assuming our bias is bullish, meaning let's say we're expecting price to get up to this level or maybe a level all the way up here off the chart. Order flow signatures is something that I look for every time I'm looking to get into a trade, or if I'm already in a trade, I'm looking for these phenomena to occur in price action. So I'm adding these little rocket ships above the highs because whenever we're trading down here, I'm watching. If I'm bullish, let's say I'm already in a trade, I want to see speed above that high there. I want to see speed above this high. Okay, again, if we're bullish, you want to see speed above highs. Do we get that here? Absolutely. We blast through it. Okay, do we get speed above this high? Yep. Same thing with this high here, and then we have higher time frame targets, which we'll learn about in the upcoming lectures. I'm highlighting this fair value gap, okay, because what do we talk about? Again, if we're bullish, you want to see either the fair value gap stay completely open or at least the lower half. So here we have a fair value gap. Okay, this doesn't become a fair value gap until this candle closes. So as soon as this candle closes and we open on this next candle and trade down, and we don't even have a willingness to come back into this here, meaning we left it completely open, that right there is a really bullish signature. Okay, if I'm already in a trade and I see this occurring in my trade, I'm real confident that we're likely to hit my targets up here, because we're leaving fair value gaps open. Even this fair value gap here that I don't have shaded, okay, we're leaving that open, and then we run higher. That right there is a bullish order flow signature. So we have inefficiencies like this staying open, and we're getting speed above highs. That right there is what I look for in price action. This right here is a low resistance condition. There's very little resistance in price running to your targets. This is what we want to engage in, okay? And I'm adding a little light bulb because I'm watching these areas in price action. I'm watching the highs. I'm watching the fair value gap. Okay, so a little light bulb indicates this is what I'm looking at in real time. Another example here. Okay, lows. Do we get speed underneath that? Yep. Look at this fair value gap here. Okay, this is the same pattern that we see, okay, over here. If we're bearish, let's say we're already expecting lower prices, say this low here. If we're bearish, we want to see speed underneath lows, and what do we talk about? We also want to see speed through opposing PD arrays. So what does that mean? Well, if we're bullish, if we're expecting higher prices, we would expect this fair value gap to what? Send us higher. We trade into it here, have a reaction off of it, and then we're coming back down. I want to see us blast through this fair value gap, have no regard, no respect for it. That tells me that price is likely heavy to the downside, and that's a signature that I look for in price action. Okay, so we have a fair value gap here. I'm monitoring it. Okay, we're expecting it here. Okay, we're wicking through it here. That's not anything really convincing. And then this candle here, boom, low taken out with speed. Okay, we call that displacement. And we're completely blasting through this fair value gap. That is what I like to see. Light bulb here because I'm watching this fair value gap. Do we trade past the midpoint? Absolutely. But you see the bodies here? You see how the bodies are staying in the lower half of that fair value gap? That's good enough for me. Ideally, I would want this whole thing to stay open, or at least the upper half, meaning I wouldn't even want the wicks in the upper half, but this is fine, okay? There's nothing wrong with having wicks. The bodies are staying in the lower half of the fair value gap. Then we rotate lower. Do we get speed underneath lows? Yep, that's what you want to see. Watching these fair value gaps, every single fair value gap that forms, I want those to stay open, or at least the upper half, okay? So fair value gap here, does it stay open? Yep. Another fair value gap here, does it stay open? Yep. So when this up close green candle, okay, when that candle closes, we form a fair value gap here. This candle opens and it doesn't even have a willingness to trade up into that. It just gives up the ghost and breaks lower. That is a bearish order flow signature. When I'm in a trade, let's say I got short from anywhere in here, or let's say I just shorted this fair value gap and I'm targeting lows down here. If I see this stuff occurring in my trade, I'm confident that these targets are going to get hit. Okay, when I see this fair value gap, see how it's used as support to take us higher. Well, if our bias is bearish and we're expecting lower prices, I want to see us blast through that. So you'll draw it forward and see one candle. That's nice. Okay, we want to see that. Fair value gap stay open. See the short-term low here? Do we rip through that with speed? Absolutely. Fair value gap staying open. That's bearish. That's a bearish order flow signature. Equal lows taken out here. Equal lows taken out here. And I'm sure we had a higher time frame target here. That brings us into consolidation. Now, I want you to look at this chart and tell me what order flow signatures do you see? I'll give you a couple of seconds. You can pause the video. If you paid attention to lecture 1, there is none in here. There is nothing in this chart that is low resistance. There's nothing in this chart that is super high probability. This right here was sort of a trick question, if you want to put it that way, but this is a high resistance market condition. We don't have any order flow signatures in here. Okay, if we're expecting higher prices, okay, let's say we're aiming for a target up here. Yes, it's aiming or it's gravitating higher, absolutely. Okay, it's heading towards our targets. But look at the delivery. Are we getting speed above highs? No, it's a lot of wicks. We take out the high, retrace. Take out these highs, retrace, taking out the low. We take out this high here, retrace down. Taking out this high, we retrace down. This is high resistance. This is what we don't want to trade. But it reached my target, yes. But the amount of stress that you're going to experience trying to trade something like this, I promise you, is not worth your time. It's not worth your money. Okay, you're going to get knocked out at break even a couple of times. You may take a couple of losses trying to trade this. Okay, compare this price action with this price action. With this price action. Which market would you rather engage in? Okay, so I don't see any order flow signatures. Do we have any fair value gaps that are staying open or at least the lower half and just move higher? Nope. Do we have speed above highs like we get here underneath lows? Do we have any obvious speed above highs? No. It's just lethargic, it's slow, it's boring. We avoid days like this, okay? So if you're paying attention and you're taking your notes from lecture 1, you shouldn't have got tripped up on that. Homework assignment, all right? I want you to go into your charts and find 3 examples of these order flow signatures. All examples should be in low resistance liquidity run conditions. Okay, we do not focus on difficult market conditions. I don't even want you going into your charts finding examples from markets that look like this. Okay, save yourself the time because I don't expect you to want to trade market conditions like this. Find examples where it's moving one directionally, it's clean, it's obvious. Something like this, clean, obvious. All right, find little screenshots just like I'm doing here in low resistance conditions. Annotate your chart with text explaining what order flow signatures you see in the chart and how can you use that information. All right, homework example. This is my own markup here. So we drop down. Do we get speed underneath that low? Absolutely. Okay, we leave a fair value gap. Do we leave majority, if not all of that fair value gap open? We come back up. Yep. See midpoint there? We don't even reach it. Then we break lower again. Okay, that is an order flow signature. Both of them occurring in the chart. Speed underneath lows and leaving fair value gaps open. See this small little bullish fair value gap here? This green candle. Okay, there's a small fair value gap there. What is the order flow signature? I want to see us disrespect that opposing PD ray. So if I'm expecting a target to be hit down here, this bullish fair value gap that would normally send us higher if we're looking for higher prices, I want to see us run through that, just disrespect it, because I'm expecting targets down here. Do we get that? Yep, one candle, blast through it. We come back up, fair value gap. I'm watching that again. Do we respect midpoint? Do we leave majority of that open? Yes, we do. We trade up, can't even get to midpoint. We break lower, tagging targets, and that'll send us into consolidation. All right, and this is also what I want you to do on your own chart. You need to add this part. This is crucial. Okay, you have to add the text. Here I'm writing, price is showing an unwillingness to trade up to midpoint of the fair value gaps. There's also speed underneath lows, which means price is likely to continue in that direction. If I'm in a short position and see these signatures occurring, I can feel confident that my targets are likely to get tagged. Okay, so I'll go back to the homework assignment so you can remember. I expect you to do that and continue to do the homework assignment from the previous lecture if you haven't done that already. And I will see you all back here for lecture 3. Love y'all. Peace.